morning. Great to have you on this morning. If you saw the video, I mentioned it before. We're going to talk about an interest rate update, certainly seeing some movement there and giving you the information that you need to give that great information to the clients you serve. Lydia, see you there. Karen, Chicago, great to have you. Lynn, see you there. Jessica, so many folks from all over the country. So glad to have you on. So I want to start off with one thing. I'm going to share my screen here in just a minute, but if you missed it last week, we did a spring market update for KCM, and I'll show you at the end of this deep dive how you can get the recording of that, because if you weren't on, you're going to want to grab that. But having the information in this market, in this kind of fast moving market, to give the answers to the clients we serve, what's happening is going to be the trick. But I want to start off with sort of this idea here, and I'm going to share my screen like I always do and get us started. And it's sort of a question, and maybe even in the comments as I put this up there, you could put this out, and it's this question right here: what is the one thing that could stand in the way of your success this spring? What's the one thing that could stand in the way of your success? Think about that. Maybe even in the comments here. Still see folks joining, but that's a question I would pause. So many things happening in the business. What is something that could stand in the way of your success? I'm going to offer that there are a couple of things that could stand in the way of your success, but one main thing right now, and I'll give it to you, won't delay it much longer, is this. It's your mindset right now. It's your mindset. What is the one thing that could stand in the way of your success? Without a doubt, it's your mindset. What do you believe about this market? See things on the news, you see things happening in the world, and I'm not saying we should stick our heads in the sand and ignore those things, but what do I believe about that? What do I believe about those things, how they will impact real estate? Nobody's got a crystal ball. They can't tell you what's going to happen. We can certainly look at what experts are saying and form our relevant market opinion based upon that. What do I believe? How does that influence my mindset? I'm convinced, no doubt, the one thing that could stand in the way of your success this spring is your mindset. So with that as a backdrop, I want to hop in and give you perspective on what we've seen in the last week and how it pertains to our business. These are times in the world and the news cycles and everything happening that there's so much happening outside of our business that our job is to really understand what's happening in real estate, because that's the only thing we can control. We can't control things happening out in the world. We can't control, the stock market or the bank issues or all the things happening there, but we can control how we communicate about what's happening to those that we serve. So I'll start right here. Sam Cater from Freddie Mac says mortgage rates are down following an increase in more than 0.5% over the last 5 consecutive weeks. That's a good thing. Turbulence in the financial markets is putting significant downward pressure on rates, which should benefit borrowers in the short term. So people say to you, how do you think this, bank situation, how do you think everything happening in the economy is going to affect the housing market? Well, there you have it right there. Turbulence in the financial markets, and use the word that you would use, uncertainty and, volatility, whatever word would be most natural to you. In the financial markets is putting significant downward pressure on rates. That's a good thing for the real estate business. We certainly don't hope for those types of things out in the world, but for our business, right now it's benefited us in more favorable interest rates. If you look at this relative to 30-year fix, this goes all the way back to the first part of the year. And if you remember, and certainly you do, in January and early February, saw some great interest rates, lower rates than what we've seen in quite some time, and then had our rates tick up for several weeks. And now we see this turbulence, as Sam said just there, and starting to fall back down to about 6.5. If you look at the last several weeks, this is what that looks like, from a high of over 7, in the 7.1 right here, according to Mortgage News Daily, down to about 6.55. Now, depending on what you're looking at, rates are always going to be different. This is the look at Mortgage News Daily. We look at the average rate that comes out from Freddie Mac as well. But no doubt we've seen an improvement in rates, over the last couple of weeks based on some of the volatility out in the market. We need to get the word out there. We need to be talking about that in the conversations that we have with consumers. And that is the big question right now. How will this affect housing? But I'll continue on this from a quote from NAR about the effect. Following the trend of the 10-year Treasury yield, the average rate on a 30-year fixed mortgage dropped to 6.6. That's what NAR is saying, from 6.73 the prior week. However, this is interesting, rates may decrease even further in the coming weeks, depending on the reactions in the financial markets and the outcome of the Fed's meeting. This was written at the end of last week, next week. So the Fed's meeting this week, we know the Fed does not control long-term interest rates. They control the Fed funds rate, but a lot of uncertainty, a lot of volatility around the Fed meeting, and we'll see what that brings relative to interest rates. But if we go back to the look that we've used over the last several weeks, and I don't always bring every single slide of the deep dive, but on this one we talk about the 10-year Treasury. If you followed the deep dive, you're a KCM member, you have those graphics on the relationship between the 10-year Treasury and the 30-year fixed, and we always talk about that. But this is most recent here. If you remember the relationship between an interest rate sensitive environment and what we will see with buyer demand. Now, we get below 6, we see strong buyer demand. Below 6.5, good buyer demand. Above 6.5 to 7, limited buyer demand. Above 7, weak buyer demand. And certainly that has been indicative of what we've seen over the last several weeks, really the second half of February. Now, here's what's interesting. If you look at the first 2.5 months of the year, starting in January, we have been in each one of the sectors of buyer demand. First week of February, we dipped down into rates dipping into the 5s, and then they shoot up into the 7s, and now we're right here at I'm going to call it 6.5, and we'll see what comes. But my understanding of that, my ability to communicate that, is going to help maybe my team, maybe those I serve, maybe the buyers that are looking right now understand this market. We always say it's not timing the market. It's very hard to time the market with housing. It's always time in the market. But the bottom line is this rate drop, it was enough to make home buying more affordable for many Americans. And so I want to break that down for you, give you something to share as always that will sort of articulate that or give a visual to that. So Lisa Sturdivant from Bright MLS says this: for example, if a home buyer purchased a $400,000 home with a 20% down payment and a 7% mortgage, the monthly payment would be around $2,400. That's at 7%. At today's rate, the monthly payment would be about $125 lower. So I picked a number, $500,000 borrowed, because you could cut it in half or you could double it depending on the market that you're in. But if you take this example of $500,000 at 7%, the principal and interest payment just over $3,300. Well, at 6.5, that payment improves by $166. Should we go to 6% and see something lower, that payment improves by a little over $300, $328. So as you're watching this, you can update this slide. If you're a KCM member, you can go in and download these slides and use these. Update this slide and talk about this. Get this information out into the market, and say, hey, depending on the interest rate where we're at, depending on the average loan in our area, this is literally over the last 30 days what the savings have now become. I think that's a message that we always want to communicate in a market like this, because there's opportunities. We head into the spring, and we know, for several months, there's been folks that have put off doing something because of the rise in the interest rate. Certainly in the second half of last year, many put that off. So I want to end with this thought real quick. Mary Boone from Real Estate News said this: if you see a new report or a study about homeownership, interest rates, or refinancing, share that info with attribution and then expand upon it. Help people understand what it means and then add your perspective. That's the goal, certainly, of what we do at KCM, is to give you a synopsis of what's happening in the market, give it to you in such a way that you can then add your perspective and then share it with people. I think in today's world, that is what people are looking for. That is what people are trying to understand, what is actually happening out there. So, and Jess, I'll pull you up here in just a minute. If we have any questions, But if you missed that webinar last week that I talked about on the opening of the deep dive, the spring market update with 3 unique listing opportunities, go to trykcm.com/webinar. You can then get the link for the replay. The replay will have all that information, and there's an offer if you want to become a KCM member that is in that webinar. We would love to have you as a KCM member. But you can grab the slides if you go into the member area and go under webinars. You can get all of that information if you missed it. So, Jess, I'll pause for a second and see if we have questions from folks.
Hi, Dave. I actually have not seen any questions come through this morning.
All right. Well, good. I'll leave it open here. Linda, I see your message there. Great news. Lock in, float down, or the other. No doubt. But if there aren't questions, we will wrap it up. As always, reach out to us if you do have questions about that. But these slides are available in the member area for KCM members. Go grab those. Use those to create content this week. Use those to get the information out to those that are looking for it. Hope you have a great week, great day today, and we'll see you back next week. Take care.